Hey folks, Vic here with your weekly trade video for Friday, February the 28th, 2025. In this video, I want to talk about why trading can be so difficult, because after all, most people lose money trading, and we want to help you avoid being part of that group. So let's get into some of the key reasons for this and some remedies that will definitely be helpful. Okay, let's dive right into this here. So what happens is you get clusters of good luck and bad luck, call it. This is like flipping a coin. After hundreds of flips, you're going to come out at or very close to 50-50, right? Half heads, half tails. But along the way, you will see that at times there are strings of heads or tails. Okay? You'll notice that sometimes quite a few, say, heads come up in a row. And if you're betting on tails every time, you'd be really starting to question whether the odds are truly 50-50. So you might be very hesitant to bet on tails once again, but sure enough, after hundreds of flips, it will come out at 50-50. The challenge that we're talking about here is handling adversity or losses. And folks, I tell you something, with trading, you better get used to losses and get comfortable with them. And they will sometimes come in clusters, 2, 3, maybe even more bad trades in a row. Trades that lose. And by the way, here's a little interesting factoid. For traders who are very high achievers in other things in their lives, other areas of their lives, this can be particularly difficult. They just aren't used to losing. Why? Because they have control. In trading, once you're in a trade, you have zero control. You only have probabilities, and that's how we trade. Okay? So, the question is, how brave will you be in stepping up to the plate and placing that next trade even after just 2 bad trades in a row? Probably not feeling great about the trading system. Okay, no matter whose it is, it doesn't matter. But if the system has proven to be profitable over a long period of time, you have to take the next trade. It's the one that could be a big winner, and that's all part of the odds. And for you to second guess about whether or not it's going to be a winner or a loser, it makes no sense at all from a probability point of view. Did you know that you don't need super high accuracy to have a great trading system? A 50% trading system can be very, very profitable. In fact, you Google this yourself. Have a look at the turtle traders. They were accurate, I believe, in the neighborhood of 30%, 33%. A third of the time they were profitable. The rest of the time they lost, and they were incredibly profitable, hugely profitable trading system. The fly in the ointment is you, the trader. Your mind is going to start to cast doubt on what you're doing, and so begins to self-sabotage, the loss, and eventually just quitting. So if your hit rate starts to drop, right, and you're getting one of these losing clusters going, it's going to start to weigh on your confidence. So that's all good and fine, nice and philosophical, but how do we handle this? Well, first of all, don't kid yourself. Every system goes through this. I don't care if it's, no matter who it is that you're trying to follow, systems go through losses like this, despite what claims might be made. But the good news is that there are several ways to mitigate these downturns. So I want to look at a few of them now with you. And I'm going to put up a chart of one of the trades that Darko pointed out in his longer-term trading service just recently here. And let's just bring that up, which I've got right here. Okay, and as I'm recording this trade is actually still ongoing. So the first way and the most obvious way to mitigate losses is by having a trading plan in the first place. And I tell you, it shocks me how many people don't have a plan. They're not really sure what they're going to do when they get to their computer. And within that plan, there are moving parts, like how much of your account you should risk and how you manage your trade once you're in it. And these are so critically important to your trading. For most people, all they want to know is, where do I buy and where do I sell? So, all of these moving parts within a trading plan need to be thoroughly understood and implemented. Where I buy and where I sell, that's just not gonna work that way. That's just you need to get a little bit deeper than that. On this chart of the Aussie Canadian dollar pair, in his pre-market analysis for February the 3rd, which was this day here, okay, Darko said he would be buying and he was going to be buying down at where this green circle is right here. Okay, and he actually got filled the next day right here. Okay, this is all in advance. All of Darko's stuff, he shows it in advance, never after the fact. He doesn't go back and say, oh, I would have bought here and now I'm making money. No, he tells him when price is up here. Okay, so let's talk about risk, because at the end of the day, you are a risk manager. That's your job as a trader. So you need to understand how to control risk so that you don't ever get seriously hurt by adversity. Okay, meaning a move against you. So for example, how much of your account are you putting at risk in the first place? What percentage of your account will you lose if the trade goes straight against you? Like this could have gone straight down like this and stopped you out. Okay, just plan on that. So for our traders, we recommend no more than half of 1% of your trading account at risk. And that way, you're always going to preserve capital, and it still gives you really good, trading opportunities, and you can still do very, very well just risking such a small amount. But the good news is that you're never going to have a trade that's going to wipe out your account or anything. Another way to mitigate a loss is to understand trade management. What do you do once you're in the trade? Like the trade gets filled here, and then it starts to go up, and you go, oh, maybe I should, get the risk out of this trade, or what should I do? And then it goes down, you go, oh, this is going the wrong way, I better jump out. Oh, now it's going back up, and all these emotions that get going. Is there a logical time and a place to reduce risk and or take profit? Well, I'll tell you, and this is again comes back to having a trading plan, but in the case of this trade, Darko told the members after a few days of this kind of jumping around that with the initial stop loss down here, move it up underneath here, and he's got a very specific place where it goes underneath here. And the way he teaches how to do this trade is still ongoing. Okay, it was not stopped out. It poked down into this area again, but the stop was not hit, and the trade is still going up. Okay, and this is one of the big advantages we have with trading. Right? Think about that. We don't usually end up taking a full loss. That's a big deal. In this case, if price was to go against us right now, well, in fact, hey, what's happened? This has moved up so much now that it's actually up more than a 1-to-1 reward risk. So from your initial pit risk to where it is now, we're up more than 1-to-1. Okay, so you have options now. This should not ever be allowed to be a losing trade at this point. You get a free look, and that's one of the nice things about proper trade management. Okay, now a string of winners ironically can also have a very detrimental effect on a trader. It's called euphoria, and it can cause feelings of invincibility, and you might risk more than what the rules say you should. You sort of abandon that plan. Position sizing goes out the window, and this is probably a precursor to losing your entire account. The trick is to always plan for losses through impeccable risk management. Always, okay? The very best traders are the ones who manage risk very, very well and are good at never letting small losses become big ones. The bottom line is to trade with the least amount of initial risk and set that as your maximum amount to lose, and get that risk reduced even further or eliminated if possible if the market starts to move in your favor. And your trading plan should have answers for exactly when it is that you'll remove risk and or take some profit. Okay? This is all part of having a plan. And in fact, this is what our trading approach is all about. No matter, you could be trading longer term or shorter term, it's the same stuff. Okay? So, to recap here, the difficult part of trading that we started talking about is, once you have a plan in place, of course, I assume that you have a trading plan in place. The difficult part is the adversity that you're going to face. And the better equipped you are in advance to handle this from a psychological and a risk management point of view, the better your chances of success. Okay? So I hope you found this helpful. Thank you so much for listening in. We always very much appreciate it. In the comments below, in the comments section there, let us know what part of trading you find to be the most difficult. Is it the stuff I talked about, or is there something else? We'd love to hear from you. Thanks again, everyone. Take care. Have a great weekend.